philosopher Mike Tyson once said, everyone has a plan until they get punched in the face. We've got a lot of disruption going on in our marketplace right now. And the reality is when you look at the research, less than 50% of channel partners actually have a business plan and a go-to-market strategy for what it is they're doing. Our next guest is Larry Walsh, founder and CEO of the 2112 Group. Works with top-performing technology executives, works with companies in our space, sits down and helps these people stay focused on planning, measuring, and growing for success. So I'm going to welcome in Ted Schuman and Larry Walsh.
Thank you, Chris, for the introduction for Larry. We're thrilled to have you here today. We are going to cover a lot of topics. This is just going to be kind of three guys riffing here on various topics in the channel. And we have one of the best experts and industry analysts with us today, and that is Larry Walsh, who I will also say is an Army veteran. So thank you for your service.
Thank you for your service.
I got out in '86. I was an E4 in the Navy, and I understand you were in the Army. For a moment, tell us what you did in the Army.
I defended democracy one bar stool at a time. It was a wonderful time to be alive back in the '80s. Yeah, so no, seriously, I was a communications and security specialist. Served in USARA for 3.5 years. So it was an amazing time in my life, and I was supposed to be a career guy, believe it or not, and but circumstances changed things and had to get out.
Well, thank you very much for your service, Larry. I appreciate it. On behalf of everybody in the PlanetOne partner community, thank you. It's quite an honor. Okay, let's get right into it. Guys, we got some notes here. We're going to refer to them because we want to make sure we cover these topics to the best of our ability today, and then we're just going to fire away here, guys. So Larry, first question. Let's start kind of broad. Where's the money being made today? And before you answer the question, I'll give you kind of the 10-second overview of PlanetOne. So where's the money being made today, and what do you see changing in the future, obviously because of the pandemic? But let me tell you, PlanetOne, we came out this year, biggest quarter ever, tapered off as everybody, retreated to their homes and got set up, picked right up once everybody got settled. And I will tell you through September sales, we've already beat 2019's number. The things that we saw change, and then I'll give you the floor here, is the lower end, small market, transactional business because of all the shutdowns, certainly tapered off. We have the biggest backlog of business ever because a lot of businesses were closed, but sales continue to be made predominantly of mid-market enterprise space, and as no surprise, hosted voice was leading the way along with security and mobility. So what are you seeing on your side, Larry? What's going to change here?
So first I wanted to say is that as of this a couple of weeks from this event, prior to this event, they released the Q3 GDP numbers, which were in line with 2112's forecast at the beginning of the pandemic. We actually did see a V-shaped recovery. We saw a 33% increase in GDP activity on an annualized basis, about real terms, about a 9% increase on a quarterly basis. And so absolutely stunning numbers. But the thing is that those numbers are still in the technology and in the telecom space is still bifurcated. So we are subscribing to the K-shaped recovery, where you have those that are winning and those that are still struggling. And the winners in the technology segment is anyone that's dealing with cloud computing, collaboration in UCaaS, mobility, automation, managed services. And that's going to continue. And I think that that's the one thing is that we're seeing is that as the COVID numbers are beginning to increase again, everyone's talking about second waves. It's an increase in uncertainty. We do believe that there's going to be still constrained operational circumstances for many businesses. So those services-based technologies are going to continue. The one area that stands out, and you said it about security, we see security being broken up on both ends. Is that there are segments of security that are doing extraordinarily well because they are feeding into the work from home, the distance, and the physical separations. And then you have pieces of security that are not doing well. The ones that are really rooted in the big infrastructure, the big transformation projects, those are not doing well. So there is, when we say security, we caution saying, use security with a little s, not the big S.
Why do you think they're not doing well, in your opinion?
Yeah, no, it's the reason why there are segments of security that are just being halted or paused, like a lot of big infrastructure projects. Um, Infrastructure technologies, anything to do with big build outs, big on-prem data centers, networking, security, storage, they're all being held back because of the inability to spend money. Some businesses, and particularly some segments, have been extraordinarily hard hit. I can't tell you who. We started to have conversations with a major hotel chain. They were looking to 2112 to do some work for some research for them, and they had to pull back because their long-term forecast changed. And so they said they started to just stop spending money until they actually had greater clarity. And you see a lot of that with a lot of businesses, large and small. And so they will continue to invest in things that will enable their businesses to work under any circumstances. And then probably sometime in late 2021, going into 2022, you'll start to see the bigger projects come back.
Well, I sure hope so, because that's one of the reasons we're seeing the big backlog,
Yeah.
where those infrastructure deals really, doing a rip and replace. I mean, we have a lot of those orders sitting there right now, but there hasn't been anybody in buildings to turn them up because employees got distributed to their work home or to their work from home environment.
Well, I will tell you. So, I'm based in that little town called New York City, and you can see the impact here in commercial and residential real estate. You see in residential real estate, there's a 37% drop in occupancy. You're seeing commercial and residential real estate rates in New York decline because a lot of businesses are just folding up, and some businesses are trying to get out or renegotiate leases. We've had conversations with insurance companies, with real estate firms. Fortunately, my sister-in-law is the COO of an office furniture dealer in Manhattan. We're seeing the direct impact on how this is happening, and it's really denting businesses. But what the good news is that it's redistributing the workforces, and you have people moving into other parts of the country because they can now, and that's going to change the buying dynamic in a lot of IT and telecom services, and it's going to put a lot of pressure on carriers to deliver quality of service to areas which they didn't pay a lot of attention to.
Great.
So Larry, you talked about the GDP numbers. Ted talked a little bit about what PlanetOne saw this year. Let's take it down a little bit of the level for the people in the channel that we have participating with this session today. Everyone's trying to take a look at how you take advantage of this for growth. You gave a very specific example about shifting your focus on security. Taking it up to one step higher and more strategic conversation, what should our channel partners be looking at right now in terms of putting a plan in place for growth, not only for kind of the next phase of what we're going through, but really setting up for kind of a 3 to 5 year run?
Yeah, I think, look, the world, whether people say it or not, this is a services-based world, a services-based economy. And we are all now trying to build around that recurring revenue model. And the biggest thing that any business can do that's built on the recurring revenue model or some type of annuity is to focus on customer retention. First and foremost, is that yes, it costs money to acquire a new customer, but it costs more to replace them. And what we see is that the recurring revenue model starts to lose stability below 90% retention, and it really starts to cost a business if it falls below 75%. So if you're not giving the customer a solid experience, it has a direct corollary impact on whether or not they will renew or expand business with you. And that's really it doesn't sound like growth, but you can't have growth unless you have a strong foundation. And that's the first thing I recommend to everyone.
Yeah.
Well, if you are at 75% retention, I'm going to tell you right now, there aren't many sales organizations in this industry that can outsell that kind of burn rate.
Yeah.
That means you're sitting at over 2% a month. That'd be brutal. I can give you a figure. We watched very closely this year our partner accounts, and they're all listening today, only attrited. We really haven't seen that number move very much, not because of COVID. So thankfully, we're not one of those businesses that have been devastated by this, terrible pandemic. I would argue the tech sector is holding up its fair share of the U.S. economy right now. Let's talk about something else. I use the saying a lot of PlanetOne that we do the common things uncommonly well. And that includes having a plan. We have regular leadership meetings and planning meetings all the time. But I guess your research shows differently. What are you seeing in the channel for guys that are kind of not working so much in the business, but on the business and putting those plans together?
This is something I have been preaching for years, is the need for better and more planning. Uh, I'm just going to try to remember if I can recall the numbers correctly. If somebody may call me and say, "Oh, Larry, you published something different," but these are around the numbers. Some 47% of partners that we've surveyed tell us that they have no business plan. 57% do not have a strategic plan for growth. In stressing how important cloud services are to to your partner's business. 73% do not have a plan for selling cloud. It's largely opportunistic. And it's something like 58%, I'm trying to think it in my head, 58% do not have sales plans or sales goals. Now, you're going to say, well, if 47% don't have a business plan, then 53% do. Well, I can tell you from conversations that at least half of them have either weak or just, or mostly fictional plans. They're not really rooted in reality. And we need to do better, because what we can tell you is that a partner organization with a business plan tends to outperform those without by 2x to 5x. So there's a significant delta between those that plan and those that don't. And I will also tell you is that during the pandemic, we saw this as well, just based on the cash reserves of partner organizations. So the 30% of solution providers at the beginning of the pandemic only had 2 months of 2 months or less of cash on hand.
That's frightening.
Yep. And Ted, this best practice is at least 3 months. And yes, there was a fair number that I think it was 21% had at least had 3 months of cash on hand. The balance had 4 to 6 months. Even though there was a fair number at that 3 month level or above, they were planning around optimal operations. So they had, and a lot of what happened during the pandemic is that you and your partners, you were being called on more than ever. You were frontline responders. And what happened was, what we heard this is that utilization rates spiked as much as 60% for MSPs. So what does that mean? Is that it's not that you had more business, it means you had more capacity SAP with existing resources, which means in no new revenue. So that put a lot of stress under a lot of these businesses. And that's why planning is essential. There's no silver bullet when it comes to marketing and demand gen. As you said, we get inundated with offers of the latest thing that's going to make things work better. As we said before, is that the biggest the thing is that when you're going to be doing demand generation, the mistake that gets made is that vacuum. There's not a reason for doing it. That's the reason why you need a good business plan. You need to have a vision for what you're trying to accomplish. You need to be able to articulate a value proposition, and then you can start applying things like different marketing programs and marketing techniques. But it takes work. And it's one of these things that you have to do continuously. And too often I see partners buy into these overnight programs and these marketing campaigns in a box and these low cost, high promise subscription models. They deliver just enough to make them feel like they got something out of it, but they don't actually contribute to real growth. And that's what we need to, we need to make marketing and sales really a core part of each one of these businesses. It's not just about selling a service, selling another line, or selling a technology. This has to be about selling value.
So let's take it up another level. So we hear all the time about RPA automation, the tech stack. We absolutely believe in the investment there, the automation side of the business, using analytics. There's absolutely a value to everyone, not only in terms of pulling the right data to build a business plan, but in order to build some type of operating leverage within the business and grow forward. A lot of times that becomes the clear focus, but we also know we're in an industry where the human element and the relationship side is very important. So from your perspective, how do you balance that, and how do you approach something like that when you're trying to get to the world of tools and automation and platforms without completely dehumanizing the experience?
So I'm going to start by saying I am completely on board with the idea of building around omnichannels. So omnichannels, if you probably, people have probably heard of it, but don't really understand it. Omnichannel simply means is being able to engage with the customer at any point, anywhere. Automation, though, gets a bad rap because too often we equate automation to taking humans out of the equation. My friend Liz Cope at Train, the people who provide us with all the air conditioning environmentals in the buildings we used to work in, she puts it great, and we have a great podcast with her on this on my 2112 podcast, where she talks about automation to humanization. So the entire point of automation should be to free humans from drudgery and time-consuming tasks so they can engage with other people on a better level more consistently and more often. So my advice to if you're planning out and trying to look at ways to do more automation, particularly in sales and marketing, is think about it not as eliminating human time or eliminating people from the process, but freeing people up to be more personal with your customers.
All right, let's bring the 800-pound elephant into the room with us. Acquisition, channel consolidation. I was very vocal about this 4 years ago when Intelisys was acquired by ScanSource. If you're so interested in my comments, I'm sure they can still be found on CRN. However, it is a topic that has become ever present in our conversations. I know we get approached by partners. I talk to other peers of mine. It's, listen, I think it's kudos to the channel for going irrelevant and very small and insignificant to a multi-billion-dollar channel now that has drawn the attention of Wall Street and the private equity firms around the country. What are you seeing, hearing? What advice can you give partners? I mean, there's people listening to us right now. They're probably wondering what the future looks like. They're probably, some of them may even have been contacted from an investment banker, private equity group. Any thoughts on this topic?
Yeah, so I'm a bit of a contrarian when it comes to the overall consolidation in the M&A trend. When people talk about consolidation, contracting the size of the industry, our evidence is that it actually isn't. On an annualized basis, somewhere between 1% and 3% of the channel population is actually consolidating. More partners will go out of business than actually go through an M&A on an annualized basis.
That's not a good number.
All right, did we pay? Have we paid Larry?
I'm just saying, I don't want him going out of
I
business.
mean, he just told us we're going out of business.
I did not say you're going out of business. I said some others will go out of business. Nevertheless.
I'm not worried about us.
Yeah, no, we're good.
Yeah, no, yeah. I mean,
no, we're really good.
no. So the thing is that there's a lot of interest in businesses that are generating recurring revenue.
Yeah.
And so
that's where the value comes from.
Well, yes and no, because sometimes it's easier with these businesses just to hire the people than to try to buy the business. And so what I'm saying is that there's some cases where they'll just go out of business and then they'll get hired and their customers will come along with them.
No, I don't disagree with that at all, but from a valuation perspective, a monthly recurring revenue base is much more attractive than other types of businesses.
Because of the residual nature.
If it's a real revenue base.
Well, yeah, I'm clearly making that assumption, right? I'm with you.
Right. But what I'm saying is that a lot of the reasons why is that, look, come back to the theme of our conversation. Do you have a business plan? Do you have good business and managerial governance? Do you have solid financials? And a lot of times these conversations are being initiated because those fundamentals aren't in place.
Mm-hmm.
And so, and then I've had many conversations about this where some people hey, maybe it's time to punch out. You're reading on CRN or you're reading in channel E to E about all these deals going on. Hey, maybe it's my time to cash out. And then they go out to market and they don't get the interest and they don't get the offers that they think they're going to get because they don't have those fundamentals in place.
No, I think that's a very important point. I mean, taking an asset to market requires certain characteristics that make that a marketable asset, right? I mean, you talked about churn earlier. I mean, the biggest way to devalue a book is to see rapid growth in churn or an increasing number year over year, right? I mean, owning a recurring base of shrinking revenue is like trying to bet on depreciating assets. So yeah, I think that's the difference, right? Is when you take a look at it, what are the key metrics that drive it? And it's everything you talked about. Having a business plan in place that addresses the key metrics that drive the business. Without that, there's not even really a starting point to take a look at what opportunities might be there.
Correct. And I think it's, as I said, understand what makes a business interesting. I'll tell you a story. Is that an MSP approached me looking for some help. They wanted to sell their business and they weren't getting the interest that they thought they were going to get. Well, come to find out that they had 22 customers and they were generating $175,000 a year in recurring revenue. And they thought, because what everyone tells them is that was good.
Yeah.
Well, okay, it was good to pay their bills. It wasn't good in terms of valuing a business. And a lot of companies find themselves that way. I mean, we have research that show there are many businesses out there within your orbit. When I say your orbit, businesses like PlanetOne that have less than somewhere between 25 and 50 accounts, that they're adding few new accounts to their roster. They're losing their attrition rate is, like I said, they're somewhere in that 75 to 90 range, which makes them somewhat unstable.
Sure.
And so
Yep.
that's what we need to work on. We need to work on the fundamentals to get those valuations up, if that's what your exit plan is.
Absolutely.
Well, the exit plan starts and stops with EBITDA,
Right.
right? You got to be able to show shareholder value to the acquiring party. So
Have you proven you can make $1?
yeah. So what? We've got one more thing. Let's talk about it right now. 2020, tough year. I think everybody come December 31st would be quite happy to hold that glass of champagne or proverbial drink in the air and watch 2020 come to a close.
I mean, it's only 4 months away.
Yeah, I know. Well, thank you for sharing. We've been looking for that crystal ball, by the way, at PlanetOne.
4
We can't-
months.
Yeah, we can't find it anywhere around here.
It's COVID time.
It's
We're on
COVID. I
COVID
know,
time.
COVID time.
Yeah.
So what did we learn this year? Looking back, I mean, we obviously hindsight's always 2020. So what did we learn looking kind of in our rearview mirror?
Services rule. I mean, it's as plain and simple as that. Is that the evidence is clear from the analysts that track market trends on a technology level. They said IDC says 80% of businesses are already planning a radical digital transformation into the coming year. Gartner says 80% of enterprise workloads will be in the cloud by 2025. So if you think back on the journey that we've been on services for the past decade, and the cloud era started with the last recession in 2008. When the markets crashed, businesses found themselves without access to credit and funding, and they needed to maintain their operations without a whole lot of cash revenue, cash assets. What did they do? They distributed their costs by going into the cloud. And it's been an experiment to an adoption to a comfort level to the point where we are today, to where it became an imperative. And a lot of the stuff was already moving into some form of cloud-based service prior to the pandemic. What 2020 has taught us is that it is no longer an option. It is the imperative. It is something that every business will do, and that is accelerating more cloud adoption, more digital transformation, more workflow automation. And and again, if you look at the entire point of the phenomenon of work from home, it's not going to go away. 70% of businesses are going to keep their employees on a work from home footing even after the pandemic.
Yeah.
So we see that this is the reason why services will rule, because they scale both in terms of capacity as well as geographic coverage.
I will give the analyst some stats here. 1999, .com went .bomb. The channel took off. We did very well. 2008, you just referenced it. The channel, indirect channel, the channel we live in, did very well. Still had double-digit growth. And in the midst of 2020, the most difficult year professionally, I would argue, for most people listening to this call, we will still have significant growth in the midst of arguably the most challenging times ever. And I'm just thankful that it bodes very well for our sector, very well for all of our partners listening, and makes me really appreciate, I don't own a nail salon, Denny's, or a Jimmy John's, right? Or a small hotel in a neighborhood. Those poor guys have been crippled this year.
Yep.
But I heard some things here. First of all, 80% your transformation and the cloud adoption. Everything you just said should be enormously uplifting and encouraging for the partners listening today. Because if we can summarize some of these comments from Larry's tips, got to have a plan. It's going to add 2 to 5x to your value in that you'll have a plan, you'll set the goals, you'll make more money. and your value prop. You hit that 2 or 3 different times over the course of the last few minutes, Larry, is your value prop. That starts with your messaging on your website. How do your customers view you when they're making those technology decisions? And then customer retention. So I heard stay close to your customers, stop the bleeding, services, 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 and put a plan together.
Yeah, I mean, look, cloud adoption and services rule.
Yep. And I'm going to give you 2 more stats here that to reinforce that message. This is 2112's research. 58% of the time, a customer will approach a channel partner for advice on cloud services, advice and direction. That tells us that tells us that the channel is instrumental in helping the customers find and select and put together the cloud services they want. Here's the problem. And by the way, that is a third more often than going to a search engine and twice as often as going to a cloud vendor directly. Here's the problem. The channel partner only gets the sale 11% of the time.
That's it.
All right. That's where we need to improve. There is a disconnect where the partner loses contact with the customer. The opportunity is there. The partners just need to attach themselves to it.
Yeah.
I would say the guys who are doing 11% are probably not PlanetOne partners. We're way better at closing than that.
Yeah.
Aren't we? I mean, we're way over that 11%. That's insulting. They must be doing business with one of the other masters. PlanetOne, you partner with us, those numbers go way up. All right. Larry, thanks. Let's have some fun. That was the most serious I think Chris Werpy and I've ever been.
That was
hard.
That was not.
Wow, did I bring you guys down?
Conversation.
I started to, I don't know if you saw the sweat, but I was starting to get a little nervous.
No, I think people are worried right now at home. They're like,
we haven't told any jokes.
2020 was so bad that Werpy and Schuman were serious for 40 minutes.
It's frightening.
We're growing up. My mom would be very proud.
I'm wearing a jacket, for
Yeah, look at
God's
him.
sake.
Look at him. He's grown up today.
This is ridiculous. I didn't sign
All
up
right,
for
let's
this.
have some fun. Larry, thank you so much. You've been absolutely amazing. You gave us a lot to think about today. Really, really
Thank you.
appreciate it. This was a great session, and we'll look forward to speaking to you again, I'm sure. Thank you so much, Larry.
Thanks for having me. Great to be with you and all the partners at PlanetOne.
All right, we're closing up the morning, action-packed. A lot of good speakers. Now it's time for you to go network. Use your lunch hour to get with our preferred providers in their virtual expos. Please plan your meetings, reach out and spend this time. We've got a whole bunch of great resources available to you to go help you grow your business and learn more about what it is they're doing. Remember, if you attend at least 5 provider meetings, you will qualify for one of our 4 vacation giveaways at the end of the day. Very important to attend those. Stick around to the end of the day to make sure that you not only qualify for those, but have a chance to win. We're going to be back here at 12:25 p.m. Pacific time. That's 3:35 Eastern for you early folks over there. We'll get right back into a deep dive on Zero Trust with a good friend of mine in the analyst community. And I promise you this is one of the good analysts. He's cynical. He's a smart ass. Communicates a lot similar fashion to the way I do. So go enjoy your time, and we'll come back with more great stuff for you this afternoon.